All right. Welcome back, everyone. Thank you all for joining us again. Today has been it's cold. It is cold in Central Florida. I'm not sure what's going on. We've got snow in Florida. We got all kind of stuff happening. You know, um we had an inauguration yesterday. I'm not sure if the weather is responding. I'm just kidding. They always say when hell freezes over. But welcome back. Thank you for joining us tonight. Tonight we're going to be talking about mortgages. I'm hearing a little feedback. Is that I'm gonna mute you for a minute, Jimmy, and let's see. Okay, that may have been it. Thank you, everyone. Thank you for joining Caribbean Diaspora Vibes. My name is Donna Morton Morgan. I'm the president of Women of Culture Incorporated, president of Caribbean American Diaspora Alliance, real estate broker, and life coach at Inner Vibes Consultant. I want to thank you all for another edition of Caribbean Diaspora Vibes, where we share tips, community information, health, wellness, and everything in between while we celebrate the Caribbean culture. Tonight's topic is about mortgages, it's about escrow. We are waiting for Lewis Witter with Caribbean Rhythms Radio Network to join us. Um, I guess everybody's maybe bundling up or something tonight. So, but we'll wait for our other co-hosts to jump on later on. But we're gonna go ahead and get started. We want to talk about mortgages. We want to talk about escrow. And if you are a homeowner, you should know what you should have heard escrow. You should have heard escrow at closing. But a lot of times we understand, buyers are excited. They just want to close, get into the house. They didn't really understand what any of that meant, right? So we're going to explain that for you tonight. We have our amazing guest, Mr. Jimy Mertune, who is a mortgage broker. And so this is the person that we want to talk to tonight to tell us a little bit more about why he's not to blame, but explaining mortgage, explaining why the payments are fluctuating. You had one payment when you bought the house. Maybe you bought the house 3 years ago, and then the payments kind of went up a little bit one year and then the next year. So you're seeing all this fluctuating. You're seeing the payments going up, and you're like, whoa, 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 whoa. What's going on? So welcome, Jimy. How are you?
Hey, Donna, I'm great. Thank you. It's always a pleasure to be here with you on Caribbean Vibe to educate, to empower, and to help our community. Education is, critical for us. It's very essential that we educate our folks, and you've been doing a great job, Dana. And I want to commend you and thank you for the great work you're doing in the community across the board with education, with helping, with reaching out. It's been great to see how much you reach to just help the community. Thank you for doing this. And I'm really honored to just be here with you to continue this work and this mission of educating and empowering and helping our people.
Thank you so much. Jimy, tell us a little bit about who you are and the company. Let's get a background on you.
Really good question to start. So I'm a mortgage broker and I've been doing mortgage for about 10 years now. Uh, I'm affiliated with JNR Funding. It's the mortgage company with headquarters in down south in West Palm area. We have some offices in here as well, but the main office is down south. I'm also an entrepreneur running a tax business for about 13 years uh, with Shine Capital and Business Solution. where we do different financial services, including taxes, business consulting. We've done a little bit of employment as well, some trade. And recently, we just ventured into a new project with Shine Green Energy, where we'll be manufacturing solar panels here in the state. Very excited, Donna, to be able to be in the mortgage industry. The main thing when I first started about 10 years ago was being able to help a family to make the greatest investment they're probably going to make in their lifetime, buying a home to start building wealth, providing a safe place for the family. The excitement that we have when we have a client goes beyond the compensation that we receive. I don't think anything can definitely compensate for this. The joy, that we bring when somebody accomplishes the dream or achieve this dream is tremendous. So that's what excites me about the mortgage because I get to share the journey with them and experience with them the greatest investment they will make in their lifetime. So excited to be here with you to talk about the mortgage. But about myself, that's what we do. And as you know, I'm a servant. I love my community, and I actually work and do business for one thing to help my community and happiness, people's quality of life, either through employment or businesses, and now through mortgage. So just serving, Dana, to help my community.
Yes, thank you so much. Um, as a fellow real estate, I'm a realtor, I'm an actual real estate broker. Um, Service has been pretty much my whole life. And the thing is our customers become family. We're there with them. I've been invited to baby showers, to weddings, to anniversaries, and even to funerals. So we do become an important part, of our customers' lives, and we treasure that. We try to make sure that everything's okay. We do our inspections. We fight for them, contract, etc., all to make sure that that homeowner gets the house that they want. We're in contact with individuals like yourself, the lender, to make sure they're qualified, the payments, everything fits, right? This is literally teamwork. Title, home inspection. It's definitely a teamwork, and of coming to closing. When we hear the words clear to close, that is like, music, because not everybody hears that phrase, you're clear to close. Some people it's sorry, underwriting rejected you. Um, Something came up with your credit score or on your credit report. We can't verify your job. You would be surprised the excuses, or we put into a one customer to make it to closing, and something can topple it where it falls apart, and then you have to tell your buyers that I'm sorry,
It's,
after
it,
the
it,
kids have, after the kids have actually even like picked out the rooms, you've picked out colors, and then you have to
yeah.
say, I'm sorry, you can't close. It's definitely, we get invested. It's very stressful. It's
It
very
is. It is.
stressful.
It is. It is a
Um,
tedious process. People
mhm,
get excited about this, especially when they visit the house. You know, they put in a contract, is accepted. You have an
mhm.
executive contract ready. And like you say, sometimes the kids already choose their room. So it's hard to go back and tell them, it doesn't work. And that's why, as a mortgage broker, we go through this process in a very transparent way from the beginning so we can set expectation, but also making sure that they understand the process, they know what is required, and they do their homework. You know, I think that sometimes people are not realistic. Dana, they're making $60,000. You want to buy a house for $700,000 because it's beautiful, it's a windy mill. These are situations where, instead of going to the pre-approval process to make sure you qualify for a specific housing. People want to watch the process, making sure that this is what I like instead of what that's really what I'm qualified for. It's really heartbreaking when we have to relay this information that it doesn't work. And I think our job here as a loan officer or mortgage broker is to ensure that you do qualify for what you are able to buy so that we don't have to give this, to any client, this bad news, after probably a month or two going through this exciting process and tedious process to know that they can't. We're trying to do to make sure that from the beginning, we know if you can or not. So when we say you can, we know for sure that you can because it's always better just to make sure before you give that information. It's a good point that she raised that sometimes people go through this with the excitement without making sure they ask the proper questions and everything, and the excitement can maybe cause them not to see the whole picture, and you'll be amazed, Dana, that I get clients they don't tell you the whole truth. And this is when, because they don't tell you the whole story, the whole truth, you go, with what and to discover that later on, it was not the whole truth. So it's a disservice to themselves and to us when they don't come clean and transparent, giving out the information up front so we can determine up front what you can buy or not. So thank you for bringing this point because it's quite common, that will happen.
Thank you. And that's why I mentioned that sometimes even towards closing, things will pop up and sometimes someone will forget to pay a bill. Um, you know, and then there will be a late. Sometimes what we think that could have been documented cannot be proven. Taxes, it's so many things along that way that can, change. Sometimes people go out and open new credit. They're so excited about the house that they go out and they buy new furniture or something like that, or they are like, oh, well, my car is broken, I need to go get this car. So all these things can really trip us up into buying. But we're going to come back to buying. We want to talk to those homeowners, and I'll go ahead and mute you for a second. We're going to talk to those homeowners that, okay, so you bought a couple of years ago, and let's say you started out at $1,500, and then the next year you're at 16, and then the next year you're at 18, and then before you know it, you're at $2,000. That's a big jump. And that can, if you're someone on a very tight budget, that can mess you up. It puts you at risk for foreclosure if you don't have the extra income. So people are venting, people are upset because they're saying, well, he said that this was a 30-year mortgage, fixed payment. So why is it adjusting the next year or the next year or even, I've owned forever and every year we call it an escrow letter that comes in and it tells us, hey, there's going to be a change in your payment. Why? Because your escrow, right? So Jimmy's going to tell you, he's going to tell us about the difference between your principal and interest, and then there is taxes and insurance, which makes up your escrow. And that's the part that's moving. It's not, if you were locked into a 30-year, whatever percentage, 3%, 5%, you're locked in there. But your taxes and insurance will change. That's the part that's moving around. That's what's causing you to be frustrated. And sometimes there's not enough money in your escrow account. And so then what they've been doing is saying, they're gonna add not only collecting, collecting for the escrow, but collecting for the escrow shortages. So Jimy, tell us a little bit about breaking down that mortgage payment.
Thank you for this question. I think this is a really good question about the mortgage payment. So the mortgage payment is made of your P&I, what we call principal and interest. So your principal and interest is exactly what the bank actually lends you, or the payment that you're paying to the bank itself. So if you're buying a house for $300,000, what the bank making you pay on that $300,000 every month is your principal and interest. That's what we call the P&Is. So is what you pay every month directly to the bank is your P&I. The other part of your mortgage payment is your insurance. Another part is your taxes. And also sometimes you pay what they call the MI, the mortgage insurance, which the bank will charge you to protect the loan itself. So most of the time, this MI can go away after you pay 20% of the value of the house. So then you don't have to pay it anymore. Some people don't know that. So you don't have to pay if the house is worth over 80%, you can ask them to stop taking that MI or mortgage insurance for you, either to refinance or not. You can just request it. So mortgage, it will include your P&I. That's what you pay directly to the bank for $300,000, for example. Your insurance, what we call homeowner insurance, and then you have taxes on your houses, property taxes, and sometimes you pay the MI, which is the mortgage insurance as well. So these are the things that constitute your actual mortgage payment. When you talk about escrow, uh, it's like a saving account that they create for you so you can pay your insurance and your taxes. And one main reason for this, Dana, is because this protect you from defaulting on your loan because of insurance and taxes. And it actually protect you as well not to have lien on your property because of these factors. And sometimes, if you don't pay this thing yearly, you might lose your house, you know, you might be in default. This will affect your loan. So the mortgage company, through what they call the servicer, create an escrow for you, like a saving account, to make you pay every month. So at the end of the year, you don't have to worry about paying your taxes and your insurance separately. It's already paid or embedded into your monthly payment when you pay your mortgage. So an escrow account is like a saving account that each time you pay your monthly payment, it goes toward your insurance and your taxes. So they pay that in full for you, so you don't have to worry about paying this separately.
So we want people to know that that's separate, right? Your taxes is governed by the county. If you're in Orange County, Florida, Seminole County, Lake County, wherever that is, Volusia County, that's coming from assessment from your county. It's your insurance is going to be that's going to be dependent on, we've got a lot of issues with insurance in Florida, so that's going to depend on who you have. We know that insurance rates will go up if depending on, the age of the roof, um, the 4 points, your electrical panel, plumbing, hot water heater, just, things like that. So there's a lot of things that kind of, plays a factor to your mortgage actually increasing. So you can't really yell at the mortgage company. Pretty much you have to just say, hey, because you're gonna call them, right? So you can call them and say, hey, why is my escrow going up? And then they're gonna say, well, it's because you have an escrow shortage. It's because your taxes, for example, um, was 2000 last year, and we just got a bill from them saying it's 2400 this year, or it's 3000 this year, right? And then that could be one factor. And then they could also say, not only did your taxes go up, but also your insurance increased, it doubled, because your insurance carrier says that, hey, everybody's premium is going up, and until you redo your roof or something like that, you're going to be in that high category. So now you've got your lender automatically is going to pay that bill, right? They're going to pay that bill, whatever that bill
Yes.
comes to them from your tax collector, um, and from your insurance carrier. So you're going to have to either, one, go to the tax collector and say, hey, what's going on? And make sure you're on homestead, and two, um, contact your broker for your homeowner's insurance and say, what's going on? Why is my homeowner's insurance so high? They're going to tell you, well, XYZ are the factors, and maybe shop around to try to get you a lower premium. But then they're going to send out to do a home inspection, and they're going to test roof and AC and electrical and plumbing, and see what kind of pipes and all of that. So there's a lot to it, but those are the factors that's kind of playing a part. Because if your insurance doubled and your taxes increase, you literally could be paying $500-600 a month more than what you started out in your mortgage. And it's
And you
really,
are right.
hmm
Right, Donna. No, no, I want to jump in to say it could be a burden because some of these expenses, most people didn't budget for them.
right.
When they unexpectedly show up and you didn't budget for them, it caused some financial stress because this is money that you didn't have saved somewhere or accounted for. Uh, and you mentioned a good point, Dana, that you know, when a mortgage company give you 30 years mortgage fix, they tell you that the payment is not going to change. What they mean is your PMI, your principal and interest for 30 years will not change. That's what they call a conforming loan, which means that there won't be any fluctuation on your principal and interest because it's fixed for 30 years until the loan comes to maturity. So that's the part that won't change. However, your taxes and your insurance, they always so subject to change because they depend on the local either insurance company or local tax assessment based on your property. So, for people to understand clearly that when you have a 30 years fixed mortgage, you might be shocked that your mortgage is going up. It's not per se that the loan was not correct. The P&I will never change for 30 years. But when your insurance goes up or your tax goes up, what's happening is your payment will go up automatically. So the escrow, which is that separate saving we talk about, including these two things, your tax and your insurance. So what happened, Dana, is, you mentioned it, you know, when there's a shortage, which means that you don't have enough money on your escrow to cover the cost, the bank will automatically pay it for you because they don't want you to be, in default, right? And then they charge you fees, and then they charge you money so that they can cover or replenish that specific escrow so you have enough money now. So this is when the fees start to increase tremendously, sometimes causing people to worry because now it just suddenly you have to pay an extra $300-500. So taxes and insurance are the biggest factors that will increase your escrow or increase your payment. And sometimes because the escrow is in shortage, they add fees that might not be, pleasant to you because now you need three, four, $5,000 additional to have enough money on escrow to pay. So we say that each month you pay your mortgage, the payment include the escrow amount, you know. So when there's not enough money on the escrow to cover this and your monthly payment is not enough, the bank charge you for it. And I think that, over the past few years, Donna, because of so many changes happening in the mortgage industry, one very common thing is that, you know, value of the houses have been increasing, and because of the values increase, the county will do a new tax assessment. And that tax assessment will tell them that your house that you bought 3 years ago, that was probably worth $300,000, now is worth 360, which is a good thing because now you have more equity, your house is worth more. With your house worth more, what's happening is you have to pay more taxes on it. So this is when 3 years ago, you were paying taxes on 300,000. Now it's 360. You actually have to pay more taxes because now the house is worth more, right? So this is when the additional tax will come. We know in the statewide here, we've been having a lot of increase in insurance. There are many factors that plays into that. Um, this is a very, what you call, friendly litigation state where, there are a lot of litigation happening for insurance, and the insurance company, to protect themselves, they have to increase costs. We are in a state where we have a lot of bad weather. We do have hurricanes. All these factors over the years, have been affecting the insurance company, and some insurance frauds are happening across the board. So the insurance company and also the market have been going crazy with interest rate fluctuation, things are uncertain, and the insurance company, to protect and mitigate risk, they actually increase prices. These are some factors that plays into your insurance increasing, the tax increasing, because of the assessment. And one factor that I want to mention as well is the fact that we've had in the state uh, an influx of new residents coming to live here. With population growth requires, the counties to spend more money to accommodate more money on services. And because we are not a state tax, we don't have state tax in here. The counties only use these, taxes to pay for services for us. And that includes all kinds of services, school, infrastructure. So the property taxes are usually a big stream of income for counties. So when we have population growth, one way to compensate for this is to increase the taxes so we can accommodate more people or population growth within influx, especially after COVID. So these are a few factors economically that kind of cause taxes to go up so high and insurance to increase. When these two things happen, your escrow automatically will be affected and increase.
But we do want to let people know that a lot of times it's just for, you may see a steep bill, but it'll be for 12 months, right? Because what they're trying to do is replenish your escrow. So they'll be doing an escrow shortage, like an escrow shortage, you know, because I've been through it several times. And so, but what they're doing is, so just know that for 12 months, instead of paying 15, maybe you're going to be paying 18. And then it'll, reassess again and let you know that, okay, you're going to go back to 16, or, and also know that if your insurance carrier, if you switch and say you were paying 4,000 a year for an insurance carrier, now you've got a $2,000 a year new insurance carrier, you're going to reduce the bill. So these are ways, so you have to do your homework to kind of check around and see how can you reduce that, that's probably the one thing you can reduce is your insurance, right?
I think that's
Yeah.
I think that's a good point, Dana,
Hmm.
because the question is, well, what do I do when that occurs, right?
Right.
So the first thing is and you say it very well, call your mortgage company so that
Mhm.
they can explain to you what happened. Usually, whenever there is an increase in your escrow, they will let you know right away. They give you a breakdown and tell you the difference. If you do not understand it, find somebody who can help you with it or call the mortgage company and they will explain to you the changes and what you can do. Once you know exactly what's going on, because sometimes the shortage could be fixed within a year, where you might go back or you can resume back to the normal payment or maybe not. Because if the insurance is high, you don't replace it, you're gonna end up paying a little bit more. However, talking to the mortgage company and ask questions so that you know and understand, and they be patient with you, what's going on, what are the changes, and when uh, this escrow is back to normal, what can you expect as a new payment? These are questions you need to ask so you can start budgeting for this payment as well. You say a key point right there. When the insurance goes up, start asking for new quotes. Check with other insurance company that
Right.
might be able to give you a better rate. Uh, if you can do that, you'd be surprised how much that you might save. I know many times with mortgage companies when you first purchase your home, some of them they might not be out there shopping for you, for the best rates. So it doesn't mean that when you first bought a house, you have the best rate. So I think this is the time when you can, shop around, look for the best rate so that you can make sure that you are back to what you used to pay because you're probably comfortable paying what you were paying years after years, right? But overall, it's good to save if you can save, right? The other thing I would say is we have what we call here homestead exemption. And Donna, you'd be surprised how many people are not taking advantage of the homestead exemption. So homestead exemption, for those listening to us or watching us, is an exemption or a reduce uh, or a decrease on your tax, based on the assessment that they give you a reduced cost of taxes, and this is for everybody who actually own a house here, in our state. Again, taxes are from the county, but I know for homestead exemption, sometimes they have specific deadline that you have to submit your application for a specific year for you to qualify. So it's technically the county say, we're gonna reduce your tax for you just because you own a house here. That usually happen when you first buy your house. That's the first time that you apply for it. But once you do have it, every year you can renew it easily without going through any kind of difficult process. And the process is easy. But some people don't apply for it, or they don't know about it, or they don't take advantage of it. And sometimes the county will even send people information about it, and yet people are not taking advantage of it. So if anybody owns a house in the state, you don't have state exemption, you're actually losing money. And that exemption can help you to lower, your taxes big time. So make sure that you take advantage of homestead exemption that exists here for homeowner.
And there's several kind of exemption. There's for 100% disability. You get a lot of breaks. But some people, yes, do not respond back to the county when, the county's not going to just do it automatically. You have to complete the forms. Right. So, and one other thing is they sometimes your mortgage company will give you the option to pay it in one lump sum because, so they may say, "Oh, well, you're short $1,000. You can pay it if you have it, or we can break it up for you over 12 months." Okay, so those are options for you. We don't want you to lose your home. You've worked really hard to get that home. So we want to, these are foreclosure tips, pre-foreclosure tips before you fall behind. Because, once you go into missing that 1 month and then two, it's really hard to recover, right? So we hope that that part you understand about escrow, contacting your mortgage company, finding out what's causing the increase. Why is your mortgage payment rising? And what can you do about it? Contact your insurance carrier, to find out about options for homeowners insurance. Maybe you're stuck for a little bit. but then maybe you can change like you can let them know, oh well, I have a new roof, or I have a new electrical panel, or I have new updated plumbing, etc. All these things, I have a new hot water heater. All these things make a difference, right? And you can shop and be at a better position to get insurance, and that's going to affect your payments. We're going to wrap up early tonight, but Jimy, tell us about prepping really quick. If you're listening, you're not a homeowner, you want to become a homeowner, you have no clue where to start, what to do, just kind of, give us a little rundown on what that individual can do to get started for 2025. You're still muted. Sorry.
That's a good question. Some people are like, well, it's a new
Mm-hmm.
year, they have new resolution, and one of them might be to be, a homeowner by the end of the year. So
Right.
where do you start? What do you do? I love to talk about the 5 C's of credit. The very first one is character. Character is actually your credit. When a company checks your credit, they want to look at what is your habits of paying back your debt. So, and your credit score is based on that. So the first thing is character, your credit. They check to see. I would tell everybody, if you have not checked your credit this year yet, go ahead and do that. You can pay to do it, or you can do it for free. Every year, you have one free credit report for all 3 bureaus for free. So there's the reason why you should not check your credit. Why you need to check your credit early. This would allow you to know where you are. And when you know where you are, it's easier for you to establish a plan to where you want to go. So you can be realistic. And when you check your credit, you can know what you need to fix. You can know what your score is based on what type of score you like to have for you to buy a house with good interest rate, right? So the first thing I would tell people, check your credit. And don't check only one, check all three of the bureaus so you have a complete, I would say, assessment of your credit itself. Once you fix your credit, when you check your credit, you know what is in there. It's probably time for you to be very realistic with yourself. What is it that I need to fix? I need to change? Which habits I need to probably change so that I can get a better credit score, right? I tell people when you invest in your credit, it's not a loss, it's an investment because you're preparing yourself for success. You're setting yourself, up for reaching your goal, your dream, achieving your dream of home ownership, the American dream, we call it. So check your credit. That's the first thing to know what's there, what to do, what you need to fix. And if you don't have anybody, find somebody like me, like Donna, who can sit with you and review the credit to know these are some issues, right? Very big thing. And one last thing about credit check. In these days that we live in, Donna, there are a lot of identity theft. Sometimes one way to figure out these things is to check your credit to see what is in there in my credit that I don't recognize. I don't know about this payment. I don't know about these things that I will put on my credit that seems like I'm paying when I'm not paying. And I've encountered these things that are all the time, where people have things to put on their credit that are inaccurate, or the people stole their identity. So other than your score, checking your credit has other benefit even for identity theft things. So check your credit. That's the first thing. The second thing is for you to start saving. You know, uh, the second one is capital. Whenever you're buying a house, you're gonna need to put some money down or closing costs. So the best time to start is right away. So you can start saving early so that you don't have to wait until a month or two. And now you're looking for the money for you to buy a house because you don't have that money saved. So I think that it's important for people to start, putting money aside, because that's your goal, that's your plan. It's easier for you to save in 9 months to buy a house than in 2 months when you're ready to do it. So whatever you put aside now, you add it for 9 months will make a huge difference. So I tell people, start putting something aside, budgeting. I would tell people, this is a good time as you start this new year to budget. So you know what is a necessity, what is not. How do I save money? What habits I need to cut off so I can prepare? What are my priorities? Because if you're gonna buy a house this year, you might need to have some sacrifices. And some of the sacrifices might be to cut off on your, Starbucks. Small things like this, right? It could be, having more discipline about shopping, of things you need, things you don't need. So these financial sacrifices will help you to make sure you achieve your dream. These are very important things. And I think that by you setting yourself for these financial, changes in principle, you will set yourself for success very early so that you don't have to catch up. You're already ahead of the game by setting up this foundational stuff that you need to do. These are three things I would say people need to do right away if their goal is definitely to buy a house by the end of the year. They are the stuff that you need to look at, but I think these are basic data that people need to get done. If you have not done them yet, you need to get them done right away.
Yeah. And you talked about saving. So you see how we talked earlier about escrow because things will change in your mortgage payments. So you don't want to get into a house and then just have the bare minimum,
I
right?
agree. I
So
agree
we're
because
giving you these tips.
this is gonna affect, your mortgage payment, you know, uh, based on how much money you put down, how much you owe. Again, you know, uh, your credit gonna affect your interest rate. It's gonna affect how much you pay for your mortgage. So all of these things, will affect your monthly payment and how much you can buy. This is very important. And one last thing I will add about preparation. I think when we're looking at somebody qualifying for a house, the mortgage company want to make sure that you have the capacity for you to pay back. Um, and I know it's a new year. However, I've seen a lot of changes. Some of them are good because they are income mobility, where people go, from one job to another job because they have better income. They have promotion. That's a good thing with income mobility. But I've seen across the board, especially for the younger generation, a trend where they don't stay in the job. They move from job to job. There is instability, I call it, not mobility, instability. And I think that if you want to buy a house, you're going to need to stay in the job. We look at 2 years of employment history, and sometimes a gap for a few months might deter you from achieving this plan. So if your dream and your plan is to buy a house, you're going to have to stay in the job, because we're going to look at this to see if you'll be able to pay. So it might be good to, stay with your company and don't do anything crazy while you're planning, to buy a house where you have three, four jobs in one whole year. You're gonna need some stability, and we look at these factors when we qualifying you to buy a house. So that's one last thing I will add to somebody getting ready and preparing themselves to actually buy a house. It doesn't mean that you cannot have additional income. It might be a good thing to provide additional income so you can have more saving, right, Dana? But but you need a stable job that we can actually go back to say you can prove us 2 years of employment history for you to qualify to buy a house.
And we know that in these days, sometimes two or three people have to get together to buy because of the income, difference, the debt to income ratio. We know that the home prices are a lot higher right now than a couple years ago. We know that interest rate is still high. So for qualifying purposes, sometimes two or three individuals. So remember that those two or three, all three people will need to have good credit, good job, stability, all of that. Remember that your lender is going to be, or your underwriting is going to be looking at your bank accounts probably for a couple months, looking at NSF charges. There's a lot of things that they're looking at. They want to just make sure that you are stable, you have that security. So, for more information, feel free to reach out to any one of us. Message me. Again, my name is Donna Morton Morgan. I'm a real estate broker for the state of Florida. And you can just message on any one of these platforms. I'm with Florida Summer Homes Realty. I've been a realtor actually since 2004, so it's definitely been a long time. Expanded now into actually doing real estate for more second chance individuals. So we want to get those individuals coming out of that have transitioned from incarceration to teach them how to become homeowners even in 2 years, because that stability is needed in that community to help them to stabilize, themselves. So I do, most of you know, I do a lot of nonprofit work, so I have been trying to incorporate that into my world of real estate. So, Jimmy, let people know how they can find you.
Well, thank you, Donna. As a mortgage broker, if you want to buy a house, you can reach out to us at 47334 2651. I'm on social media as Jimy Mertune. So you can reach out to me. If you talk to Donna, you don't find me, you talk to Donna, ask Donna, where do I find Mr. Jimy? But definitely at my phone number 47324 2651 for any mortgage need and also your taxes. So I hope Donna we can talk about taxes as the season started. But if you need help to do your taxes, you can also reach out to me as well. I would be happy to use my 15 years, 13 years of tax experience to help you out, get most refund without the headache, because I know this is a thing as well. So, our clients, our families, because we serve them with our heart, we serve them with integrity, and we serve them with transparency. That's why they come back. That's why they become our families. Dana, you were mentioning how, you go eat at the house, see they prepare you coffee. This is the best time of the year for me because I get to spend time with my client, making a special coffee, cooking when I go and do the taxi because sometimes I'm mobile. So like you, we love to lose ourselves in serving others. And
Right.
this is a great thing about you, Dana. And it shows, your heart for the community and your commitment, to help people in their lives. Thank you again. It was such a pleasure being here with you for another session. Anytime, please let me know. It's one text, one
Thank
call
you.
away to come here and help our people always.
Yes, and for everyone listening, Jimmy is also part of Caribbean American Diaspora Alliance. He's our Haitian liaison, Haitian Diaspora liaison. We give thanks for our team that can come together and again share information to empower our community. With that, we're going to say good night and God bless. Until next
Good night,
time.
everybody. God bless you all. Thank you again, Dana.
Okay.